How do I think about the math of long-term care insurance? Hey, folks, as background, my mom died in April, 7 months ago, after a 7-month stay in a full-skilled nursing home. She had long-term care insurance, been paying in it for 30 years. The long-term care insurance paid for 101 days, let's say 3 months of the 7. Um, most policies, and my mom's included, had a 90-day exclusion period, and the rest was paid by Medicare supplement. So definitely at the beginning of a long-term care stay, if it's under a year, really long-term care was disappointing. I'll just say that. Disappointing as I was going through that as her power of attorney. But I got a viewer question today that I wanted to just look at the math of this. So I wanted to give my background, my experience with my mom. So the viewer question, I'm 61, contemplating buying long-term care insurance. My best quote was $7,500 a year for $5,000 a month coverage if they're in skilled. Adjusted for inflation, that's usually 2%, and that costs you a bunch, increases the premium. And 3 years max, or $180,000. Now this is for a couple. Okay, so $7,500 was for a couple. Each one could get $5,000 a month in benefit. 3 years max, $180,000. 90-day waiting period. This is after Medicare covers whatever they cover. They usually cover the first 20 days, 100%, and then if they're in rehab, they'll cover up to 100 days. But there's a copay of, I believe it's $204 a day. So it's a pretty large copay. But that's Medicare. Do you think the long-term care insurance provides enough peace of mind to be worth the premium, is the question. How do you do the math? So, hey, how do I do the math? Let's say you pay in for 25 years. You're 86 now. 61 plus 25, you're 86. You will pay in $7,500 a year times 25 years, or $187,000. Now let's imagine you invest that premium. Okay, you just, instead of paying it to the insurance company, you just invest it yourself. And say you get 8% return over a long period of time, like 25 years. That's pretty good. I'm pretty conservative, let's say. That may be 10. But if you did invest it, you may have $631,000. So you're paying in $187,000 in premiums. That's door number one. Door number two, you could have $631,000. So 3 times, a little over 3 times the amount if you just invested it yourself and self-insured. Now, it's not that simple. Now I've got to add the inflation in there. So that this has inflation coverage on $180,000. So let's take that $180,000. Now there's two people. So $180,000 times 2 people is $360,000 worth of maximum benefit. And let's add 2% inflation to that. That comes up to $593,000. $593,000 is the absolute maximum potential benefit. Now, chances are, for most people, most married couples, one goes into the nursing home. So that, let's say that $600,000 maximum benefit gets cut down to $300,000 if one goes in. So this is just kind of how I'm thinking about this. And I just say, would I rather have $630,000 that I self-insured, saved the money, instead of most likely either Lisa and I spending a maximum of 3 years in a long-term care, and that's what they cover. So $300,000 worth of benefits. To me, it's a no-brainer. I'll take the chances myself. Now there are risks. One, you may need the long-term care insurance earlier. Say you need it, 6 months after you sign up. At 61, you need it, currently you need it at 62. Oh, well, would have been better off to get the insurance. But let's look at the odds. Also, the biggest risk, I think, to this self-insurance model is, are you going to self-insure? Are you going to save the money? So there's a look at the math. So, one thing I want to additionally cover is, let's look at the marketing for long-term care. You're going to hear this, okay? They compare it to fire insurance. You have fire insurance on your home, and there's less than a 1% chance per year that you're going to have a fire in your home. And the chances of you needing long-term care insurance is 70%. 70% of people need long-term care insurance. Well, it's a little misleading a few ways. Home fire insurance, most of the time that's a low probability, but it's a catastrophic loss. You got to get a new house. Far lower premiums as well, far lower. They're going up. Tell me that in the comments. They're going up, but they're still far lower than this $7,500. I'm paying about $1,800 a year. Long-term care isn't a low probability event, but the severity, duration, and cost are all over the place. As low as zero. Okay, and that jump leads me to this: 70% of people will need long-term care. Well, you're going to hear that a lot. But what's in that? Okay, 70% of the people over 65. It could be short-term help after surgery, which your long-term care insurance is not going to pay for. It could be rehab, which it's covered by Medicare up to 100 days if you're progressing. It could be a few weeks of home health, which would be much smaller. Could be Medicare covered as well. And this is a huge portion. It covers, it includes people that have support from their spouse or another family member. So my dad, as he's taking care of mom at home, he took care of her for easily 2 years before mom went into the nursing home. Well, that 2 years counts towards this 70% need long-term care and the duration of my mom's long-term care. So there's a lot of creativity in the stats that I'll say. Now, there are people that go in for long-term care and they go in and stay 10 years. But this long-term care insurance doesn't cover that anyway. So there are a lot of misleading statistics out there. Watch some videos on it, ask ChatGPT. Does long-term care insurance make sense? That's the fundamental question. Well, a lot of the information out there says it depends on your net worth. If you got under $500,000, saved, don't buy long-term care insurance. Good chance you're going to be on Medicaid. There's a minimum amount of money you can have to go on to Medicaid, and if you got under 500K, it's going to make sense because the premiums are so large for long-term care. If you got 500,000 to 3 million, kind of case by case, but it can make sense for some of these people to get long-term care insurance. And if you got over 3 million, it really doesn't make sense. You can, most likely self-insure. It comes down to I think this is my last point. It comes down to your risk philosophy. Do you want predictable premiums and outsource the risk at a very large cost? Do you want to just feel good but it's costly, very costly? Or do you want to keep control yourself? Most of you people that listen to my channel, you're DIYers, you saved, you invested, you know how to do this. I think that's the safe play for me. You decide for you. Also keep in mind that long-term care premiums can increase. I remember my dad going through this. If they take your premium from $7,500 to $8,500, what are you going to do? If you stop, you stopped. All that money is wasted. What they call that something? I can't remember. I'll remember as soon as I hit stop. But my plan, coming back full circle, my plan is to self-insure for both of us. Boldin, my software that I use, tells me I got enough money to do that. I got that in there as a cost. If the markets do poorly, good chance, there's a good chance that only one of us is going to need to go in a nursing home. The one spouse can take care of another. That's typically what happens. And the second spouse always has the house to lean on. You don't need a house if you're the surviving spouse, you don't need a house. You can sell that, and that would pay for a lot of the long-term care. Now, nothing's going to protect you really from, 10, 15-year stay. But I think the overwhelming right answer for me is to self-insure. There's a lot of fear inside of long-term care. I threw out some statistics. Research it yourself. I don't see it in many situations as making sense, especially for people like that take control of their own financial situation. I'd rather have that power myself. Make sense? Joe out.